Hello, everyone, and welcome back to another episode of the Market Outlook series with me, Kavita Agrawal, the founder of EXP Invest. Like every week, let's assess what's happened in the market and let's see what it can tell us about the price activity to unfold in the coming weeks. So we are starting off with the largest time frame of Nifty, and we'll start with assessing the unfolding of the broadest trend. We are using the weekly time frame for the purpose. And here I have joined two peaks of the past in order to create an upward trending channel. And we can see there has been a small breach. Now, this indicates some weakness for us, but also let's notice that there is also this EMA lying right here. This EMA that you're seeing here, if you double click the settings, this is the 250 EMA of the 1 day time frame. So this is lending a support. And what you will notice here in the weekly time frame itself is that every time the 250 EMA has come close to being tested, a reversal has not been far away. There's either been a temporary bounce back, or there's been a bounce back retest, or there has been an entire trend reversal soon after. This is the first week since we had activity below the 250 EMA right here. Let's also assess the RSI. Like I said last week and the week before that, the RSI is indicating strong bullish range as per the analysis. So what you will notice is this RSI of the weekly time frame has remained bullish since October 19, 2020. In between, from November 21 up to, I'd say, April 23, it went into a slight bear range, but that did not mean that it was a bear market. It was just a consolidatory market. We saw some sharp correction back then, but soon after that, a new bull run ensued. Now, this bull run actually began out of this breakout, but let me not digress. Let's come back to the analysis of the most recent correction. So, this is the correction that is unfolding. Now, another key observation here is that I want to draw your attention to specifically this part of the correction in the market. This was the last deep correction that we witnessed on the Nifty. And what you will notice is every time the market went in and created a new low, within 1 or 2 weeks, there was either a sharp bounce back or there was a beginning of a rally. So here, this was the first time that a low got breached, and we saw within 2 weeks there was a turnabout. Then this low was tested, and then finally it was breached here. And again, in 2 weeks, we saw the beginning of a new rally. So why that is significant is if you see this over here, this low was breached. Or you can also, for instance, take the example that this low, when it was breached, within 2 weeks, we saw a throwback in the market. And currently, this low, this is the most recent low, has been breached. So keeping history as a reference point, I would expect within 1 week has already gone by. Within the next week, we might see a bottom and at least a throwback in the market, if not the beginning of a new rally. Coming down to the daily time frame. On the daily time frame, I want to draw your attention to the RSI. You can see the peak that was forged on the 24th of September. This peak has seen significant amount of activity above the level of 60, right? This, in my opinion, indicates to us that the bull run is very much intact in the market. Now, I have a little bit of concern about this part of the RSI where the level of 40 has been breached. In this coming week, we might see a little bit more correction before the throwback actually happens in an event called the shakeout, where weak hands get stopped out or people panic. And I've already seen a huge change in sentimentality of participants in the market because of the kind of messages that I'm receiving from clients or from prospects or from scared investors they are really panicking because they can see that this previous low has been breached. The reason why there is so much panic when a new low gets or a previous low gets breached is primarily because of the media. What the media will start projecting to you is that Nifty has broken below its 7 June 2024 low, and then it'll assign a certain week that Nifty is at its lowest level in, so June, and now we are in January. So 7-month low. They'll start making comparisons and they'll start recalling facts from history, which do nothing more than scare us about the future prospects. So yes, this is the reason why when a new low gets forged, panic spreads faster. But that is also the reason why when a new low gets forged, that we see a throwback come around even sooner. And most of the retail public remain unprepared for that throwback. Coming down to one time frame lower, that is a 75-minute time frame. The RSI, again, is a very good indicator, a leading indicator in this case. And we can see that a strong bull range sustained on the RSI as long as a rally kept unfolding since the 9th of November 23, at least from what we can see. And this bull range sustained all the way till the level of 40 was breached, or rather the level of 30 was breached on the 8th of October with the first sharp leg of correction in the market. Since then, the Nifty stayed shy of the level of 60. But now you will see that even though the price is testing one of the, the new low levels, the RSI here has forged a positive divergence, right? So why is this significant? We also saw positive divergence here, which we talked about in the first market outlook video of the month of January. Over here, we saw this positive divergence, smaller one, and then we saw sharp throwback in the market. Here we are seeing a rather bigger positive divergence. So I would expect, like I said, the next 1 or 2 weeks to bring about formation of a sort of a bottom and either a throwback in the market or beginning of a new bull run. Either way, as a short-term swing trader, I am looking for opportunities where I can allocate cash, and most of my cash is already been. Right now, at this point, I'm 75% invested in the market. I'm sitting on only 25% cash. Talking of important levels, from what I gather, the level of 23,000 is going to be a very important support zone. 23 is going to be a very important support zone. And over and above this, I believe the level of 23,340. Earlier, I was talking about the level of 23,250, but I think this is a more specific level when it comes to the Nifty, and I will show you why. So if you look at the 75-minute time frame, take a zoom in at the last week's activity. Last week, this 23,340 has acted as a very important resistance zone for the market twice. First, on 13th Jan, when the market opened sharply lower, this is where the high was forged. Even before that, on around Friday, this acted as a low zone. And then again, on 16th of January, you will see that the market opened with a massive gap up, but failed to sustain above the level of 23,340. So I think it is a more important level than 23,250 that we were earlier using. So 23,000, I believe, is going to act as an important support because, again, it's a very important psychological level. And historically, if you see, it also coincides to some extent with the formation of this peak of 27th May 2024. So from the 75-minute time frame, our takeaways are that there is a positive divergence and there is a retesting of a key zone, right? Here also you can see a positive divergence was forged over time, and that led to a pretty big throwback in the market. Percent-wise, if I measure this was in percentage terms this was an up move of about 6.41%. So that's significant opportunity in the market, if you ask me. Um, so that's that about Nifty. Let's now move on to Bank Nifty's analysis. Now, Bank Nifty, I was quite bullish on Bank Nifty when it sustained this support level. But since then, we can see the Bank Nifty is topped out and is giving a sharp decline. It is definitely below the 250 EMA on the daily time frame, and the decline in the banking sector has been pretty sharp. In fact, on the daily time frame also, if you see, a couple not very bullish indications have come about. Firstly, the RSI has sustained resistance at the level of 60, and on the correction, it has broken below the level of 40, both of which are bearish market behaviors. Coming to the 75-minute time frame, also there was a failed positive divergence between this lower low and higher low on the RSI. We failed to see the formation of a higher high on the price or sustenance above the resistance of 51,800, but we instead saw the continuation of a massive correction. Now, remember what I say about positive divergences, that a RSI positive divergence may not always indicate unfolding of bullish activities. There are three possible outcomes that you need to consider when studying RSI positive divergence. Number one, that it leads to a proper throwback or a rally. Number two, that it leads to a small throwback, not a complete reversal of the price trend. And number three, that it leads to no positive activity. In fact, it's just the RSI as a banded indicator, kind of making room for more correction to unfold. So this is the third criteria or the third possible outcome in which there was no throwback or no reversal. We just saw the continuation of the decline after the formation of the RSI positive divergence. So this is also why it's so important to use proper risk management tactics when dealing in the market. Currently, the RSI is indicating further weakness, unfortunately, in the Bank Nifty. And speaking of key support levels, so I think this is where we can see some key support coming in for the index. This is roughly the area of around 47,000 support zone. So this is the zone that I would personally be looking out for. Coming to the auto sector is forming a positive divergence on the daily time frame. However, it also needs to surpass the previous peak of around 24,100 to give me that confidence. So speaking of individual stocks in the auto sector, I think stocks like Eicher Motor, even Bajaj Auto to some extent, Maruti has given good rally. But Eicher Motors and Bajaj Auto, they're starting to give some positive indications. So I'm waiting for more confirmations before I go ahead and take my positions there. But I think auto sector has potential building up for long side trades in the coming weeks. On the 75-minute time frame, also a positive divergence or a positive range shift can be noted, even though the price has not necessarily started forming higher highs and higher lows. So auto sector is definitely on my radar for the coming weeks trade planning. Commodities, I think it is not looking very bullish. It did start to give an indication of a positive divergence, but as you can see, that did not really materialize. It did not give any confirmation, and that it has not affected our activities in any way whatsoever. Consumption sector. So the consumption sector I can see has formed a strong positive divergence. It is also taking support at the 250 EMA. So this sector is a super trending sector, which means that once it gets into a trend, it stays in trend. So here, once I get a confirmation of a proper reversal by way of the sector index going above the level of 16,000, 11,700, I would be more comfortable dabbling in stocks specific to the sector. One stock that I'm particularly looking out in this sector is the Tata Consumers. Energy sector, I don't think it's a good idea to trade energy stocks right now. They seem very volatile. Maybe short-term trades is a different story, but it's better to protect your capital from the energy sector right now. Finance sector. The finance sector is also given a breakdown very similar to the Bank Nifty index. And here also I can see two clear indications of a potential continuation of the correctionary trend. With respect to where the key support lies, I think this peak or this resistance turns support should be an important level that we would be looking out for on CNX Finance. FMCG. So FMCG, after a massive correction, has started forming a base here. And if you look at the RSI is also forming a pretty elaborate positive divergence. So I think the FMCG sector, even stocks specific to the sector like Dabur, Nestle India, Marico, Hindustan Unilever, there was another one, Coalpal, they're all starting to look very, very attractive. Coalpal has already been pretty bullish, but the other stocks that I mentioned from the FMCG sector, I said Dabur, right? They've all started to look very attractive. So FMCG sector is something that I would like to keep my eyes peeled on. The intra sector, I don't think it's a good idea to seek out this sector yet. It's extremely volatile, even though it is giving positive movement over the past 4 days. You can see the condition of this movement, lots of gaps, big range, small bodies. So this is indicating a lot of weakness or rather volatility in the sector. I am kind of weary of trading in the intra sector right now. Now, IT sector has taken a real beating with poor earnings coming out this week. And I think stocks like Infosys, stocks like HCL Tech, they are showing massive negative divergences on the daily time frame, which is an indication of probably a major correction coming in the IT index. The negative divergence that I'm talking about is also visible on this IT sector index as well. And it looks like the correction can continue for some time. So stay away from the IT sector for the time being. The metal sector. So the metal sector RSI has just given a sharp bounce back from the level of 30 here, which, if you look at the past, has often been the point from where massive rallies have begun. Speaking of which, the metal sector stocks are also starting to show strong indications of a potential upside. So auto sector is somewhere I'm paying attention. Metal sector is the next sector that I'm also paying attention to in order to make fresh positions. Coming to the pharma sector. Now, the pharma sector is currently in a correctionary mode. Why would I say that? Because it's number one, it's been a while since it has given a full-fledged rally. And even the previous rally that it did give, in the first place, it failed to forge a new high compared to the previous high. And on the downside, it has now reached below the channel, which is it has been respecting since past many, many weeks. On the RSI front, the last time that the RSI approached the level of 40, it gave a small breach there, which is a new event. The last time the RSI was below the level of 40 was in March 23, long time back. So this was the first indication of weakness. But I think the CNX Pharma continues to remain attractive as long as the index is able to stay above its previous low level. Right. So I think at least small term opportunities are looking quite attractive. A stock specific to this sector that is looking quite attractive to me right now is Ajanta Pharma. Oro Pharma, even though it has faced some negative news and is declining pretty fast. I think the impact of the negative news might already be factored into the price by now. And it may, if participated in with proper risk management, may give you some opportunity for making money there. But again, risk management is very important. PSC. The overall trend in the PSC, to be honest, looks quite weak to me. But the fact that the RSI has touched the level of 30 on the daily time, the 250 EMA has been tested and has been breached. However, the fact that the previous key low level has not been breached yet, that could potentially act as a strong support when the index does approach it. But for those who are holding PSE stocks, like, get so many messages from people holding on to stocks like PFC and BCC, that be stocks that have forged highs a long time ago, but haven't seen a massive rally since then. You might be seeing days of some respite going forward. So keep an eye on the PSC sector, but don't have high hopes just yet. Now, speaking of the PSU bank, the public sector banking stocks are looking way more attractive than the private sector banking stocks. The chart development in the public sector bank is definitely more enticing than it is on the private sector bank. So I think keep an eye out on the public sector bank index and stock as well for potential opportunities. Here also we can see that the RSI seems to have completed its course of correction. It has not exactly touched the level of 30, but it rarely has been doing that since the past. Well, the last time it really touched the level of 30 or came out from it was in May 2020. So since then, it has not really touched the level of 30. This is as low as it has been coming, right? So I would expect the public sector bank to become quite attractive in the coming days. Same thing goes for the realty sector. So you can see a common theme kind of repeating across different sectoral indices, that the RSI has made its way to the level of 30 and started to show some bounce back. Why is that significant? The reason is very simple, that given every sector or every stock or any underlying personality, the test of the level of 30 indicates a sort of an exhaustion of sellers. So you might have heard the term oversold. When the level of 30 gets reached, that goes into an oversold zone. That again indicates an exhaustion of the seller. So the scale of buyers and sellers in the market is kind of tipping, and it's tipped significantly a lot in on the selling side. So when that happens, there's a sense of exhaustion of product to be sold. So naturally, the buying pressure starts building up, and it's time for the price to kind of make its way up higher. So that is a kind of a repetitive theme that is being seen across the sectoral indices as well, and also the broad market index, that is Nifty. Coming down to the service sector next, again, even the service sector, if you look at this past activity, the solid blue line is a 250 EMA, and it has acted as support a lot many times. And the index is also close to the level of around 35, which is a momentum support level as well. So here, even though we need to wait for the formation of a higher high above the level of 30,800, 50. Until that happens, I wouldn't even bring this sector on my radar. Consumer durables, I wouldn't say it looks attractive right away, but the decline that has unfolded has been very, very sharp in the last week. So you can clearly see the difference in the momentum on the upside versus the downside. So the amount of distance that it covered in over 33 days, it was able to cover almost the same distance in just 9 days on the downside. So the momentum has been significantly stronger on the downside when it comes to the consumer durable sector. So I don't think this looks attractive immediately. So I wouldn't spend a lot of time here. healthcare sector analysis is pretty similar to the pharma sector. So, with that, we come to the end of today's market outlook video. If you found that useful, consider joining my Telegram channel, which is Trade with Kavita. I'm going to share the link in the comments and in the description below. If you already use Telegram, all you need to do is go into your search box and write Trade with Kavita, and you will see my channel. Just beware, there are some fake channels running with my name, so you don't want to engage with those channels because they can share a lot of misleading information with you. So in my channel, I post daily quizzes. I post link to the videos that I'm producing, educational content. I also post about my analyst comment on market weekdays, and my broad market overview is what I typically use this channel to post. And that's that. So thank you so much for attending the Market Outlook session. I will see you again next week. Until then, happy trading.